Okay, I'm going to go over with you two big changes in the U.S. for high net worth people that can dramatically lower your taxes. It's not going to maybe totally eliminate them, although for some people it would. Okay, if you want to eliminate all taxes, I'll show you another option for that. Also, we don't give tax advice. We do have accountants and lawyers in the U.S. and other countries that work through our company. So what we do is we deal with the citizenship and residency to get your taxes to zero, and then we work with accountants that can help you on that end. Okay, now a couple of things I want to talk to you about today is the new estate tax limits for 2025, and also the foreign overseas exclusion, which is also going up. And also, folks, if you can do us a big favor, we don't monetize this channel. So if you like our videos, if you can give us a thumbs up, and also hit the subscribe button on the right of your screen right here, and you get new videos automatically. And this helps in our algorithm of our channel. We don't monetize this channel, like I said, so this can help us out a lot. If you like our videos, pass them also to your friends. All right, now let me tell you how this works. As far as those who sold out a new life outside the U.S., Americans working in other countries can now exclude up to $130,000 of foreign income for 2025, and then that's up from $126,500 for 2024. And this adjustment helps U.S. citizens abroad by minimizing their taxable income and alleviating double taxation. Now remember, this new $130,000, which you can double that to $260,000 if you're married and your wife also qualifies, and she's qualifies for the foreign overseas exclusion, and you do a joint tax return, you can double that figure. And this goes up, traditionally goes up every year, okay? Now, it can also help you on your FICA taxes, and that can eliminate up to $260,000 for husband and wife, and that's on earned income. There are ways you can take investment income and you can actually convert that to earned income. We can work with you and show you how to do that. We have a company that can help you do that. Anyway, let me just go over on how this works a little bit, and then you can make a decision what you want to do from there. If you're in a type of business right now and you're in the U.S., especially in the U.S. because the foreign overseas exclusion pertains to that, and you want to move or you're thinking about moving overseas, you're crazy not to do it, okay? Now, if you're a doctor or a lawyer and you're having people come into your office, it's going to be pretty difficult to do that, okay? It needs to be someone who can work from their house or anywhere in the world. And if you're going to do that, pick a country that doesn't have an income tax. That just makes common sense. Now, the U.S. does tax income worldwide if you have citizenship in the U.S. or you have a green card in the U.S., okay? Now, but they do give exclusions up to $260,000 if both husband and wife, $130,000 each, qualify for the foreign overseas exclusion. Now, the Internal Revenue Service, the IRS, has announced that the annual gift tax exclusion now is increasing in 2025 due to inflation. Now, the exclusion will be $19,000 per recipient for 2025. That's the highest exclusion amount ever. Now, the annual amount that one can give to a spouse who's not a U.S. citizen will increase to $190,000 in 2025. In addition, the estate and gift tax exemption will be $13.99 million per individual for 2025 gifts, and deaths up to $13.61 million in 2024. This increase means that a married couple can shield a total of $27.98 million without having to pay any federal, state, or gift tax for a couple that has already maxed out lifetime gifts. Now, this for the couple that's already maxed out lifetime gifts, this means that they can now give another $760,000 starting in 2025. Now, another thing too you might want to consider is if you can move overseas and qualify for the foreign overseas exclusion, if you're self-employed, you're responsible for paying the 15.3% FICA tax. But If you set up a foreign corporation and that foreign corporation pays your salary, it's not subject to the FICA tax as long as you're qualifying for the foreign overseas exclusion and that foreign corporation pays your salary. Now you can avoid this, like I said, with the foreign overseas exclusion and up to a limit of $260,000 if both husband and wife work and they both qualify for this. Now again, if you're making millions of dollars a year, you might want to consider just relinquishing your U.S. citizenship. You can get your taxes to zero if you do this. If you want to know more on this, folks, go to our website, www.citizenshipquickly.com, if you want to legally get around high income taxes or get a passport as quick as around 4 to 8 months. And I would like to hear from you. If you got a question or comment, put it below. And don't forget to hit our subscribe button right on screen right here, and you'll get new videos automatically as they come out. And give us a thumbs up, folks, if you like the video. That will help in our algorithm of our channel. And I look forward to talking to you on the next video. Take care.